This short clip is from my live trading room. You can engage directly with my fabulous team and me at LaDucTrading.com for all our research and trades. Or for just my daily live streams, you can access via YouTube memberships. All links are in the description. E-mini Russell for RTY 2 hour. I'm just showing you it's chop fest here on a Friday, but the breadth has already started to roll over. So just keep that in mind. It does not have the support. And then here is the E-mini. ES futures, you can see it's coming into 65.81 soon. And look at the liquidity underneath. A mess. It is still the reason I study Fed liquidity, cumulative new high, new low, volume, indicators, the whole thing. It's the basket, all of it together, how it's doing, how it's performing. This is sideways. This is weakness. We're still in weak mode. We're still in breakdown mode. We don't have any, just because it's options expiration doesn't mean we have a lot of support, is what I'm trying to get at. So this yield spike moving higher is a bigger deal. And the fact that breakdowns have occurred underneath the surface, we need some support for a right tail to occur. We need some news. If there was ceasefire, that's the biggest risk to market bears, honestly. Otherwise, this Mag 7 ratio is going to drag the indices lower. The Gulf countries are saying, we're out. They're not going to be as generous with U.S. investments, whether it's AI tech or a hospital in Houston where they donated hundreds of millions of dollars, a follower shared. It's a big hit to U.S. investments, full stop. I still think that's the torpedo headed for the U.S. that the market does not see yet. We've got metal volatility. We've got rate volatility. We've had a little bit of shake and bake in currency volatility. That hasn't even really happened yet. And I will continue to warn this dollar move once we get above 100.5, this little area. Right now we hit it and we came back in. Remember that? Once we get above it, it'll move very quickly into about 102.5. So I think that's the next kind of shoe to drop. I don't know when it's going to come, but that's what I'm looking for. I'm looking for that push higher, and I don't see any growth ratio. This is my growth value ratio. I don't see any support of, how do I put this? Yeah, it's on a little bit of that. That's okay. But usually it comes down into this area. So this is why I think we have lower to go. It's not really doing anything but rolling over. I don't care about this price action for Bitcoin and Ethereum. They're just liquidity decoys. And honestly, we already have off-ramp in play. So none of these hold any attention for me at all. I just check them for clients because they are bullish when the market starts to move higher. So that's it. This is just not very happy. So we have some work to do. We got some scared longs. Commodities are not shelter. Bonds are not shelter. Dollar hasn't taken off yet, but yields is just about to. The selling already started, and I want to show you some of that as well. But my point is that I still see this area as some congruence of support or crash risk. So here's your 50-week coming into play. And the reason why I showed you that SAP, for example, is because even on that fateful 50-month, you can see it stopped for a moment, had a wee bounce, and then it continued lower. So right at this congruence is what I'm trying to show you, where you get this 50 and you get monthly and you get Keltner, and it should have a bigger, it was even a fib level, and it should have a bigger bounce if it's really going to get supported. I'm just not seeing that with this guy. I'm not seeing that high potential that we're going to have a resumption higher. But this is definitely my price target. No question about it. 65.08 happens to be a monthly, happens to be Keltner, Bollinger Band 50 week. This isn't a weekly. This is where we should get supported. Okay, that's all I got. And I think, it's a big think, that we could hit it next week. So if the market's just too weak underneath, like this is coming back down, big bearish engulfing. This is negating everything back to July of 2025, weak sauce underneath the 100. Here's the 200 day. This is advanced decline. Looks like it's headed there. This is NYSE. We're already back to that level from October. Remember the $0 club? But here's the 200. Looks like it wants to head there. We've got advanced decline for NASDAQ is the one that has been holding up. And look at the 10 and 21. It got defended in November into the year end, Christmas, Santa, whatever. It's gone sideways for January, February, and now look at it. That's a big bearish engulfing. The 10 and 21 is about ready to roll over. Crash risk is still viable, is what I'm trying to say. And you've got the Qs. They're already on this target that I gave 587.86 to be exact. So that's the 50 week is down at 578. It's another $10 lower. So you've got $10 lower and a magnet, repeat, a magnet at 50 week. For QQQ, we're at 588 and the 50 week is at 578. Breadth is an absolute abysmal mess. This kinetic action, that then waterfall cascade, that Monday gap down that got bought and has continued selling, and they're not stopping. I mean, look at this. This is going all the way back so far to the beginning of the year. We know gains have been wiped out, but I'm talking about the breadth that everyone was so excited about. Remember I said value rotation, November, December, January, February, and then volatility? In lieu of sector rotation, there will be volatility. Well, the volatility has gone up and breadth has absolutely deteriorated underneath the surface in a huge breakdown. Like this that I spied back up here after this week in March. All we needed to do was break to form that evening star reversal. Perfect. Then we gapped down. Massive bearish. Then we broke the 10 week. Then we broke the Keltner. The whole thing is just underneath the surface, falling hard. It's amazing we're only 5% from all-time highs.
Join Club to trade with Samantha. Scan this QR code or click the link in the description.